Hey, Colin, how are you?
I'm good, Angel, and yourself?
I'm good. Last week, the stock market has been really volatile. It went up on Monday, corrected huge during the middle of the week, and came back roaring at the end of the week. And we knew that it was option expiration, so the volatility was kind of expected. But one thing we were not really expected was the outperformance of the metals. Gold and silvers were really outperforming. On Friday, we saw that silver miners went up over 10% in one day, and that hasn't happened for years. So I think it's a great opportune time to talk about silver for us this week. So what's your take on the whole movement for last week?
Yeah, the silver miners and silver did move up quite a bit. And in that liquidity event of a few months ago, silver fell down to $11, $12, which is, I think that might be a generational low, possibly, because at the time, if you go to buy silver from a bullion dealer, for example, you couldn't get it for, anything less than $16, $17. And we've seen as the futures price has risen slightly, those premiums have still kept their margin, even if you go to buy the real thing. So I think, the comments by Chairman Powell are giving people some inkling in, the back end of this, there being some inflation. And, if they're producing all this, monetary methadone, if you will, and there's less supply of goods and services being produced, there's going to be inflation. So you got to find some place to, maintain your purchasing power. And I think silver may be sniffing that out, and gold as well.
Yeah, if our viewers didn't know, last Tuesday, Fed Chair Powell was being interviewed and was asked a question of whether he would support negative interest rate down the road in the US, where in Europe and Japan are currently already doing it. And he stopped short of saying that they won't do it, but at the same time, the market really feels that it probably will happen very soon, isn't it?
Yeah, I think so too. I mean, every time the bond market has, shown a move in there, the Fed is reacted to the market. The market says they're independent. I mean, the Fed says they're independent and whatnot, but typically the Fed reacts to what the stock market does over time. And I don't see why they won't react to what the bond market is telling them. As we saw last week, the 2-year treasury bond market was for the first time showing negative rates. So although small, that may pick up over time to being more negative, and Powell will have to cut interest rates. But I don't know how they're going to keep this fiscal and monetary experiment going without going to negative rates, as we've seen in Europe and Japan and other places in the world. To keep this game going, they kind of have to go to negative rates.
Yeah, so regardless of what's happening in the future, what's going to happen in the future, I think it's worth looking into some of the investment that viewers can immediately grab a hold of, which is silver. So I know you prepared a few slides for us. Would you like to show us what you got?
Yeah, let me share this presentation here. So as you can see, the real interest rates in the late 70s were negative, and that was a great time for precious metals and hard assets and anything that would hold its value when there was stagflation. And stagflation seems like it's going to be here and is already here if meat prices and beef are any indication of that. And I don't see why some other areas will end up doing that. But we have prolonged negative interest rates right now. Even we've had them for several months. And even in the great financial crisis of 10 years ago, we had a period of negative real interest rates. And the 1970s, if you were around then or know people who were around then, they'll tell you, the oil shortages and the lines of gas stations and the amount of, prices went up for goods and services. And This is a chart of gold here. Down here in the left, you see the arrow of the late 1970s and early 80s. We had a prolonged period of negative real interest rates, and gold did well. And then if you look at the right side of the chart, in 2008, 2011, we had a prolonged period of negative real interest rates, and the metals did well. When you have an asset that holds its value, when they print so much currency, people are flocking to anything to maintain their purchasing power. And silver in the late 70s did well, and the silver miners and gold did well as well. So if you look in the late 70s and then in the great financial crisis of 10 years ago, we had periods of negative real interest rates, and silver did well. And in this chart, you can explain to our viewers how this is setting up.
Yeah, I guess I can. I think right now we're at a place where the breakout is kind of happened from the lows in March, and I think it closed at $17. And I think there's a 200-day moving average on your chart at about 1820, and I think that's a really critical point. If on the weekly chart we're able to break out and close above that 200-day moving average, then silver will have a great support at that particular level. And I think to my eyes, it looks like a very early sort of cup and handle formation where, it's been 5 years, more than 5 years of consolidation on the same range. So if we're able to break out of this level, and seems like the environment is really allowing this particular asset class to have that breakout, then it can have a great potential to kind of go back to $30 and beyond. I think the high was $48, wasn't it? So I think, yeah, I think if everything goes well in terms of breaking out to the 200-day and being able to form a cup and handle, I think the outlook will be very positive on it when we look at this particular chart.
Yeah, and speaking of how gold and silver have done in those inflationary and stagflationary periods, in the financial crisis, we see in 2011, you see the big margin call crisis, which we had, a few months ago, where this gold silver ratio fell quite a bit, and then it recovers. And as we've seen in the last, 2 years or so, gold has done very, very well, and silver's kind of lagged behind and hasn't done a whole lot. But at the top right of that screen, you see how we're starting to reverse to the mean. And I think over the next maybe year or two, you're going to see silver outperform gold, because gold typically moves first, and the big gold mining stocks, and then the lower gold mining stocks, and then silver goes, and then silver mining stocks go. It's just a cycle that typically happens. And if history is any indication of what is going to happen, we could definitely get back down to 80 on the gold to silver ratio pretty easily, and that would be $21, $22 silver price pretty easily. And once it breaks that, the old highs are definitely in play. It takes a long time for those old highs to come into fruition, as we've seen by a lot of these charts. It's cycles and how interest rates work. And this should be a pretty interesting setup over the next year or two in the stagflationary environment.
Yeah.
And some of these charts here of the gold mining stocks are pretty indicative of where we are and what, the central banks are doing. And you can explain to our listeners a little bit about these charts and what they're signifying.
Well, I think this one is definitely a formation of a very round bottom, and I mean a breakout is probably imminent to break the 33, and there's a particular candle that closed above the prior high. So I think that looks like the breakout is about to happen.
And SIL is a pretty good indicator, because it is an amalgamation of many of the biggest silver companies. Mm-hmm. And as you see down the right bar down there, that's a big volume spike. Mm-hmm. And we may have some correction here in the short term because of the spike, but over the longer term, I don't see why silver can't catch up to gold and close that ratio.
Yeah, when it breaks out to with a high volume, we should always pay attention. That's for sure.
And then Mag Silver is a great company that's done well, and it's in a good jurisdiction, especially with the coronavirus and mines closing down and whatnot. And Eric Sprott is a billionaire who's actually, I think, put 60 or 70 million dollars into this one to ease the fears of many of the analysts doubting this company. So as you can see, it's starting to do good things, and it's one of the ones that may do pretty well in the next little bit here.
Mhm.
And First Majestic is probably pretty known by many of the people on the alternative media, because Keith Neumeyer tends to be pretty outspoken on the silver manipulation and how typically it's 8 to 10 ounces of silver are mined for every ounce of gold. So that gold to silver ratio is kind of out of whack with reality. And as you can see here, we've had a breakout out of that triangle pattern, and um, you know, silver miners are like steroids when the silver price moves, as we saw Friday when silver futures moved 3 to 4%, and all of a sudden some of these silver stocks went up 10 to 15%. So they have a high correlation to the silver price, as you can see here.
Yeah, it's definitely a beta play if one is to be believed in the breakout of silver. I think the future of silver is still very much, in the middle of like, is it going to be an industrial use or is it going to be a store of value? So the battle and debate will keep going on. But I think we have caught a little bit of the glimpse of what will happen if silver becomes a catch-up trade against gold and the whole stock market. So I think there's a great potential into this, and I hope we give viewers a lot of good information to ponder on and determine for themselves if it's a good investment opportunity for them. So thank you so much, Colin, for spending time putting these charts up for us, and we'll talk about more things next week.
Sounds good. See you next week.
Okay, bye.